But you're right, the Chinese government is changing the rules. They're allowing more and more international investment, and that's been the trend that we've seen for a while. For example, back in 2012, when the regulators of the insurance industry decided to allow up to 15% of insurance companies' total assets to go into overseas real estate, other specific investment types, and for the purpose that they could find investments outside of China that are having some higher yields, some better returns, while still being very safe investment opportunities. To more recently, we're seeing the free trade zone in Shanghai, and then how that's been expanded to several other cities, and ways for not only for trade, for international trade, but also for capital movement and investment to be going into China, out of China, in a much more streamlined process with less approvals, less time, less bureaucracy, and really opening up the doors to that. And even more recently, this month, how we've seen the announcement of QDII2, the second round of the QDII program, and this is going in 6 different cities, and even allowing individuals, where the limit used to be $50,000 US per year to be transferred in or out of China. Now that's being expanded, and we expect that to expand throughout China to even more cities before long. And so the Chinese government really has an agenda for the internationalization of their markets. They want to be recognized by world bodies as having a free market, and by achieving that status, they're able to increase their exports. They're able to open up their stock markets and allow for Chinese companies to raise capital on a more efficient, more economic basis. They're putting big money into New York, into Boston, into London, into San Francisco, into Australia, various cities, various projects, and we talk to the managers, and they say, oh, this is just the beginning. We've got multiple departments of our company all looking to put money into overseas assets, and you've only just seen the beginning. We're the large Chinese real estate developers who have stopped doing asset-heavy development here. They're using other people's money in China to build their projects, leveraging their expertise, but their own money, their own capital, they're putting it into overseas markets to start to learn how to develop real estate in the U.S., in Europe, in Australia, on all different corners of the world. So whereas in 2014 we saw $22 billion of Chinese capital coming into U.S. real estate, that's expected to expand. As the Chinese government lifts regulations, not only are companies more free, more able to invest overseas, but we're also seeing that the massive Chinese population is going to be more and more allowed, the growing middle class, to invest some of their assets into overseas real estate. So some are predicting that we could even see up to $100 billion a year being invested overseas into U.S. opportunities. And so it's a massive trend that we're seeing. It's a massive change for these regulations, and whether it's individuals, real estate developers, insurance companies, private equity firms, they have overseas needs. Their business is expanding, their family, their children are studying abroad, and so they want to put some of their assets. They're worried about the Chinese real estate. They're worried about the Chinese market, where the GDP is forecasted to grow at 7, which is less than in previous years, and so they want to put some of their assets into safer havens and more mature markets. So the Chinese government is moving in the direction of allowing for this type of diversification.